Hey everyone, this is Rihanna from Frugal Life, and today we're going to be talking about 7 quick strategies you can use to save money on your taxes each year. So speaking of saving money, if you want more videos like this on personal finance, side hustles, and living your best life on less money, go ahead and smash that like button down below and hit the subscribe button now. So the first thing we're going to talk about is number 1 is contributing to your retirement accounts. So this is my favorite and easiest way to save money on taxes because most of the time it's a set it and forget it thing. So if you have a job, then contributing to your retirement accounts is easy, right? You just go to your HR department and find out what options you have for contributing to your 401k. Hopefully your employer matches. You pick an amount, fill out a form, and it's done. So the one thing is that people are afraid to start contributing to their retirement accounts because they don't want money taken out of their paycheck. It is never too early or too late to contribute to your retirement accounts. So I started contributing to my retirement accounts when I was about 20, and I made the biggest mistake you can make with retirement accounts. I cashed out a $15,000 retirement account when I was 25 in order for us to go to Arizona for my husband to go to school. Going to school was not the bad part. It was cashing out the retirement fund. So we should have done it without doing that, because now that $15,000 would have astronomically risen now that I'm over 40. So that would have been 20 years of interest that I missed out on. So one thing you do want to remember is once you start contributing to your retirement accounts, don't stop. So it feels a little scary to start out with, start low. So you can start with 1 or 2%, and then as you get raises every year, tack on an additional percentage. So by the time you've been contributing for 5 years, you could be contributing 5 to 10% of your income without feeling the pain of taking it out of your paycheck. If you don't have a job, don't worry. Go to your local bank like Wells Fargo or Bank of America. Ask to talk to a financial advisor for retirement, and they will give you someone to talk to who is an expert for free, who can recommend the right retirement product for you and for your income. So you don't have to pay loads of money to a certified financial planner. However, I am letting you know that I am not your financial planner nor your CPA, so make sure you talk to an expert before you decide which accounts to choose and how much to contribute. Number 2 is even easier, and it's contributing to your medical savings account. So if you have a job that has these options, they're either called the FSA or the HSA. You will not believe how many people I talk to within my corporations that I've worked for that aren't contributing, that have the ability to contribute. There's no reason not to contribute to these accounts. And these accounts are not just for medical. So if you say, hey, I don't have medical problems, I'm never going to need this, it's going to be a waste of money. No, it's not, because you can use it for medical, dental, and vision. Even one trip to the dentist for a root canal can be taken out of your medical savings account, and you can save a ton of money. So how it works, either with the flexible spending account or the health savings account, is you decide how much you're going to contribute out of your paycheck. They take it out of your paycheck pre-tax, which saves you like 25%, right? And then you use that money to spend on eligible expenses like any sort of medical copayment, hospital visit, prescriptions, even some over-the-counter things can be covered. So make sure you research what can be covered with your medical savings card and contribute as much as you possibly can to that card that you're going to use. So the best way to do this is to average out how much you're going to use monthly for medical savings and take that amount out of your paycheck. So we, for example, will contribute the enough to cover my husband's insulin, regular doctor's visits, our prescription eyeglasses, and then a little bit more to cover emergencies. So if you want to start out small, like I did with my contributions to 401k, and then grow from there. Number 3, saving on taxes, it's itemizing deductions. So it is not just for the rich to itemize deductions. It is a totally legal thing to itemize your deductions and get as many tax deductions as you can. So the best way to do it is to file with a standard deduction and fill it out with a standard deduction and fill it out with the itemized deductions and see which way is going to save you more, and then file that way. So again, I am not a tax professional. The best thing to do is to contact a tax professional, not H&R Block or Liberty Tax or any of those chop shop tax professionals. You want to contact a real CPA, or even use a tax software like TurboTax or TaxAct. They're way more reliable than one of those little offices in a strip mall. We've gone twice to H&R Block, and both times they filled them out wrong. They filled out our taxes wrong, and we had to pay more than we would have if we had just filed them ourselves. So I don't recommend itemizing taxes unless you use a software or something like that, because it's too hard to make sure you cover everything and you don't want to miss any deductions. But if you own a house, if you own a business, if you are anybody in your immediate vicinity or your dependents or you is going to school, those are all sorts of things you can write off on your taxes. So make sure you check if itemizing your deductions is a better fit for you. Next, we're going to talk about our fourth item, and that is qualifying for tax credits. So again, if you go to school, if you have dependents, if you have kids or loved ones in any sort of daycare or senior care, all of these can be tax credits, which will reduce the amount you pay or increase your tax return. So make sure that you check all of the different things you can use as a tax credit and make sure you file them appropriately. Again, I recommend TurboTax or contacting your local CPA or tax professional to make sure you get all the tax credits that you're entitled to. Number 5 is owning real estate, especially a home that you live in during the year. So that will give you the opportunity to deduct things like mortgage points and mortgage interest. We deducted and were able to get a tax credit back of $8,000 the first time we put solar on our roof. There's also deductions you can take for real estate investments. I am totally not an expert on that. We don't have any real estate investments personally. So for that portion, I recommend contacting a local tax professional. But anytime you're able to invest in any sort of real estate, especially that real estate that you live in, you're able to take tax deductions at the end of the year. Number 6 is getting workplace benefits. So if you have the opportunity to get workplace benefits, I always suggest taking advantage of everything that they will give you. So if you decide to do medical through your workplace, you are able to have that amount taken out of your pre-tax out of your paycheck. I am no longer able to pay for medical out of my workplace because they don't offer anything in my area, so I actually have to pay premiums myself, and that does not come out pre-tax out of my paycheck. So if you can have it taken out of your paycheck pre-tax with your employer, definitely do that. And not just medical, dental, and vision. You want to check into things like life insurance, see if that comes out pre-tax. Commuter benefits I did for 5 years. They will take $300 or more out of your paycheck pre-tax that you use for commuting, and you're not paying tax on that. So make sure you check into all of the benefits that your workplace might offer. Number 7 is starting a business or working full-time from home. I work full-time from home and have for years now, and I am able to write off the portion of my house that is my home office because it is only used for my work and for my small business. You can write off a portion of your garage or your entire garage if you use it for inventory or something else for small business. You can write off a workshop. You can write off, whatever part of property you use for your small business or working from home. So you can write this off as a portion of your rent or your mortgage, so you don't have to own a home to do this. So I do this very easily on TurboTax by just putting it in the square footage of my house, the amount I pay per month for my house, and the amount of the square footage that is used for my office, and it does it all for me. So you make sure that you use that to your advantage because that's a great tax deduction. In addition, and lastly, if you run a small business, like I resell out of my home and I do YouTube and other projects out of my home, all those things that I make money on, I do have to, of course, report the income, but I am able to also report the expenses. So camera equipment, software for recording is done for my YouTube video, lighting, anything I use for YouTube video can be written off because I do make money on YouTube. And then for my reselling business, I'm able to write off the cost of inventory, packaging, boxes, listing software, all of that as well. So make sure you're getting all of the deductions that you can. Itemizing deductions, again, is a great way to do that. So thank you so much for joining me today. Again, if you like videos like this on personal finance, side hustle, or living your best life on less money, make sure you like and subscribe down below. And if nobody has told you how special you are today, you are so very, very special to me. And I do have a guest star today who's been on my lap wiggling the whole time, is my little buddy here, Odie. So say hi to Odie. He's a Jack Russell. He's 13 years old, and he wanted to be part of the video today. Say bye.